Hey everybody, welcome back to Coffee
Sometimes Tea
with Jen.
Marcelo.
So we're going to continue on our advanced modules for credit leveraging.
All right, so basically in this one we're going to be covering tax implications of credit leveraging, and we kind of already started it. So what I did was I copied it and just put it in the box here, but I'm not actually going to hit the button because I got what I wanted when I asked for it to expand. So basically, we wanted to simplify complex financial concepts related to using borrowed money, your credit, to enhance potential returns on investment. And here's a breakdown of that. So let's go and expand on each section. Credit leverage explained. What is it? Just a moment. Well, mouth. It's just got a mind of its own.
It's borrowing money to increase the potential return of investment. Essentially, you're using less of your own money and more someone else's or the lenders to invest. So, example of that would be real estate. So, you take out a mortgage to buy a rental property, then the rental income and potential property application appreciation can provide returns on investments that exceed the mortgage interest. So this is the stock market. So I'm not going to touch too much on that because
so stock market.
We're not stockbrokers.
We're not stockbrokers, but
you can use a margin account to buy stocks.
This is using a margin account, buying stock, but you got to be very careful. And this basically means you're borrowing money from a brokerage to purchase more stock than you would have been able to on your own using your own funds. And we can expand on this topic for you. We do have a little mini overview of what this is all about. We left it out of this course because we really just want to focus in on credit, personal credit, expanding on that financing, like mortgages, loans, things like that, and business. And then what are the tax benefits of this?
So the interest deductibility, which is the main tax benefit, and the ability to deduct interest payments on loans used for investment purposes, which can lower the overall taxable income. So an example of that is investment property mortgage, right?
Right. So the interest paid on the mortgage for rental property can often be deducted against rental income, reducing your taxable income.
Business loans.
And your business loan interest on a loan taken out for business purpose, including buying equipment, financing operations, can also be deducted. Student loans, while not directly related to investment leverage, interest paid on the student loans can be deductible, showcasing how the tax code encourages borrowing for investment in education. I'm going to stop right here and say I don't agree with it.
No, neither do I.
I do not agree with it. Nope. I did use student loans. Thankfully, I was able to get it all cleared up, but it took a really long time. And I don't ever remember getting any tax deductions for it. I am not a tax advisor. I am not a CPA. So I would highly advise when it comes to taxes and tax questions, see an expert. You can go see your H&R Blocks. You can go find a CPA. We do have people in our community that we have accountants, bookkeepers that might be able to better help you if you're already in our school group watching this. If not, join us. Come to one of our live nights. We're going to have some of our ambassadors that are leading experts in these kinds of being able to answer these kinds of questions. So make sure you join us if you're not already here watching these modules with us. So tax considerations, know the rules and limitations. The tax code specifies what types of interest are deductible, how much can you deduct, and what are the circumstances. An example, investment interest expense deduction limits. The amount of investment interest expense you can deduct is generally limited to the net investment income for the year. So it's not like you can just say, hey, I'm going to do this and here you go, and I'm going to get all this money back. Yeah, some people think that.
Mm-hmm.
It might not work for you. Capitalization of interest. In some cases, the interest must be capitalized rather than deducted. This means adding it to the cost basis of the property or investment, not deducting it from the current income. What the heck does that mean? Well, you're going to want to get that question answered. I'm not again, we're not tax people. We're not accountants. We go have people do that for us, because even us, we don't know.
Right.
We're touching on this because this is important to know, and also important to go see somebody that can really answer those questions. And again, we have people in the community that will be more than happy to answer those questions for you and guide you in the right direction. Okay, so passive activity loss rules. Well, do you know what that is?
No idea.
Okay, well, it's saying if your investment is considered a passive activity, there may be limits on how much of the loss, including interest expense, you can deduct annually. Again, when you go do your taxes personally, you have deductions, right? Mm-hmm. Well, in business, you can have deductions. Well, depending on how your business is structured, is it like an LLC where then you can put it into your personal, or do you keep it separate?
Correct.
Well, I know that we did an LLC and they said, oh, well, because you're personal and your LLC, we might be able to combine that. Mm-hmm. Is that a good thing or is that a bad thing? So what is your circumstance? What is it that you have going for you? That is it combined? Is it separate? And if it's separate, then that means you have 2 tax filings, 2 separate rules. So you got to know what those rules are. Okay, so make sure, as Forrest says, seek a professional. Tax laws are complex. Professional advice is there to navigate you. The waters can become really rocky. Muddy. And for some people that don't like the 3-letter IRS, some people try to avoid it at all costs. If you owe, pay, and make sure you are prepared for your year. Right. You know, as you're making your income, you need to really have a secondary account, regardless if it's personal or business. Mm-hmm. You should still have a secondary account, so that way, if you feel like, oh no, I think I might owe this up and coming year, because I don't know about you, but these tax forms have gotten crazy. Mm-hmm. To where it's like, before it was like you just write down a number and they deduct it automatically. And if you're like, okay, if I claim 0, now it's all these changes. Yeah. We can't even keep up. We have tax people who help us with that. So like TurboTax and H&R Block. H&R Block has done a great job for us in the past, but we've upgraded to CPA because we really need more hands-on. Yep. So the certified public accountants, they really need to know the rules as well, so that they're there
in their state that you're in.
Yeah, in your state. And also, where did you open your LLC or business? Was it Delaware? Was it Nevada? Was it in your home state? Mm-hmm. These are things you need to know. And if all else fails, you can try to go to the IRS publications. But again, if you don't know how to navigate their waters, that's a whole nother conversation. So keep it simple. Get some help from the experts. Mm-hmm. And again, this is just some talking points for you to just arm yourself with knowledge. That's really what this module is about. Mm-hmm. Know what to do, how to protect yourself. Again, you have resources here in the community, and you can use ChatGPT as well. In regards to figuring out, at the end of the day, find yourself a professional, whether it's a CPA, H&R Block, or TurboTax.
Correct.
So if you have more questions, list them below. Let us know. We don't have all the answers. We'll be more than happy to bring people in that can.
The experts, yeah.
And then they can help guide you in finding those answers for you. And tax season is coming up. And depending on when you're watching this, it may have already passed, but it's right around the corner sometime during the year. All right. So cheers to you. We hope to see you in the next module. And thank you for joining us here at Coffee
Sometimes. Tea. Thanks, guys.